From my point of view, the U.S. 10-year Treasury, rather than yielding 4.1, reduces your purchasing power at 2.9% compounded. And I think the consequence of their doing that will be to restore business confidence and exacerbate inflation.
In this captivating video, Rick Rule delves into the prospective path of the BRICS currency, gaining insights into why he envisions its transformation into a settlement mechanism rather than merely a standalone currency. Join him in exploring his optimistic outlook on the continual progress of technology and the opportunities it is poised to unveil. Stay tuned for a nuanced exploration of the ever-evolving financial landscape. Make sure to watch the video until the end.
Don't be scared. Be concerned. I have watched people for 50 years in my professional career say it's impossible to get ahead. If you don't try to get ahead, you aren't going to get ahead. Your biggest risk is to the left of your right ear and to the right of your left ear. Despite how scary things might seem to you out there, other generations have faced troubles too, say World War II or the Great Depression. Do not be afraid. Do not become inactive. Look at the circumstance in front of you, be concerned where you need to, and take action. But do not use world events as an excuse to fail or an excuse to quit. That's where you start. The world will be much, much, much better 15 years from now and 20 years from now. We have to get from here to there. Do not be afraid. Be concerned. Those are very, very, very different instructions. You and I have discussed before, too, that when it's inconvenient, the CPI doesn't include food or fuel. Now, that's problematic for me because I like to eat. But the most troubling part to me about the CPI and about this whole interest rate discussion is that the CPI doesn't include the cost of tax, government. A cost of living index, which doesn't include the largest component of the cost of your living and mine, isn't a cost of living index. As a thought experiment, I looked at my own household expenditures over the last 2 years and concluded that my fully loaded cost of living, including tax, meant that the purchasing power of my savings, US dollar, was declining at 7% compounded. So when we talk about a nominal interest rate on the US 10-year Treasury at 4.1, we're talking about a nominal return, not a real return. The real return would be subtracting 7, the rate of deterioration of the purchasing power, real rate of deterioration of the purchasing power in US dollar denominated savings from 4.1, the nominal interest rate, which means, from my point of view, the US 10-year Treasury, rather than yielding 4.1, reduces your purchasing power at 2.9% compounded. I believe that the consensus exists among the voters, among the electorate, to allow for a nominal interest rate decline, which is to say a larger negative real interest rate. And I think the consequence of their doing that will be to restore business confidence and exacerbate inflation, while permitting the real sin, increased government spending, to accelerate rather than decelerate. Is this something I'm afraid of? No, it's something that's inevitable, so it's something that I prepare for. But when you talk about the Fed pivot, that's what I see coming. And I think the consequences are easy to determine, not from a Republican narrative, not from a Democratic narrative, but rather from simple arithmetic. I believe that there are a couple inevitable outcomes. One will be the gradual realization among investors and later among savers that core inflation is much higher than people believe. And I think that people will begin to change their savings habits. As an example, there are a lot of people now who hold deposits in banks that pay them no interest, either because they're convenient or they believe those banks are too big to fail. Don't know other options, but that's their job. The idea that they rely on the big thinkers to tell them what the other options are, when the big thinkers would rather borrow their money for no yield, it is a sort of a false outlook. I believe, too, that traditional inflation hedges, either the Warren Buffett style ones, which is to say global dominator businesses that have pricing power within their business, or the traditional inflation hedges, including, of course, precious metals, will become increasingly attractive. I think, too, that the higher cost of capital associated with low nominal interest rates and high inflation means that the value of existing productive assets will become higher, because the cost after inflation cost to build new assets, new apartment buildings, new factories, new roads, will increase. I think looking back at the investment strategies that worked for us in the decade of the 70s is something that we're going to have to do now. Perversely, I think in the very near term, that the opposite strategy probably works, despite the fact that real interest rates are negative and nominal interest rates are fairly low. A lower nominal interest rate, which is to say if the Fed succeeds in reducing the interest rate 2 or 3 times, ironically, that'll be very good for the bond market. I think you're setting up a bull trap. I think that you're going to get capital gains in something that will later on self-destruct. But I think in the very near term, one impact of lower interest rates would be a fairly strong long bond market, which I say is a perverse incentive, because I think that investors who get trapped in that in the 3 to 4 year time frame will lose an awful lot of money. Our mutual friend, who of course lives in Argentina, Doug Casey, describes the US dollar as the worst currency in the world with the sole exception of all the others. And I continue to believe that. I'm 70 years of age. I think the US dollar will be the world's reserve currency for the balance of my lifetime. I think that US hegemony will be eroded as opposed to eliminated. I suspect that the so-called BRICS currency will evolve, if it does, into a settlement mechanism as opposed to a currency. And I think, ironically, that the BRICS currency will, at least for the balance of my lifetime, be valued and exchangeable for US dollars. I think the president of Argentina at once made an ideological choice to align himself with what is still a freer society than the BRICS society. At the same time, he paid attention to arithmetics. There is no debt market in BRICS. There isn't a real debt market in yuan. The BRICS, well, first of all, it doesn't exist, but it isn't convertible yet. There is no depth. I remember once Doug Casey saying to me, and to you, I think, in a conference, the US dollar is an IOU nothing. The euro, with 17 or 18 backers, is a who owes you nothing. The BRICS, with such stalwart credits as formerly Argentina, and if you look at who's applying to join it, would likely be fashioned a nobody owes you anything. Remember that an unbacked currency is just that, an unbacked currency. And imagine, if you will, in the BRICS, let's say that China runs a trade surplus with Russia. And at the end of the year, Mr. Xi goes up to Moscow with 1 billion bricks and said, this is gold backed, I'd like my gold. Mr. Putin says, no, I think you should keep your bricks. How is Mr. Xi going to enforce convertibility unless the gold has already been surrendered from a sovereign holder to a central repository, which none of the BRICS nations, with the exception of China, are willing to do? And China is willing to do it if the repository is in China.
As we wrap up this enlightening journey guided by Rick Rule's insights, the future of the BRICS currency and the exciting march of technology are revealed. Keep in mind that as technology propels positive transformations, opportunities are plentiful. Stay tuned for further predictions regarding gold, silver, and other financial futures. Please show your support by liking, sharing, and subscribing to our channel. Thank you for watching.